It's not what people say, it's what they do that matters. It's a rule Don Brownstein has followed to make a killing, you might say, as a hedge fund manager, because Don's specialty is studying what people do with their mortgages, specifically how quickly they pay them off. Don is a former professor of philosophy whose top fund has returned an average of 28% a year for 13 years and topped Bloomberg's list of the best performing hedge funds in 2010, up 50%. Don Brownstein of Structured Portfolio Management is back on the InsideTrack. Don, welcome.
Hi, Erik. How are you?
According to the Case-Shiller Home Price Index, we are in a double-dip housing market. What I'd like to know from you, is that supported by what you see in terms of homeowner behavior?
One thing you have to remember about Case-Shiller and other indices is that they're conglomerations of data of all sorts. In the case of Case-Shiller, one of the things that they don't do is they don't distinguish between in their indices, they don't distinguish between so-called distressed and non-distressed sales. So what's been happening is the percentage of distressed sales as a percentage of the total has gone up, while the percentage of non-distressed sales has come down. Since distressed sales have tended to take place, as they should, at lower levels than non-distressed sales, what ends up happening as a result, it looks like the total is coming down. But actually, the non-distressed sales have been fairly stable, and in fact, actually went up a little bit. Whereas the distressed sales, yes, they're still having problems and are still deteriorating a little bit.
So we're not really in a double-dip housing market?
Well, the problem, of course, is that all housing is local, and people have gotten accustomed to thinking about this as they think about the stock market or the bond market, as if the definite article really should be applied. But it turns out that you really need to look at different aspects of the market. For example, if you divide the housing market into price groups, so you have a higher group, a middle group, and a lower group, let's say, it'll turn out that the higher and middle groups have done better than the lower tier groups, which tend to be represented by, the subprime houses and the houses that were sold at the very end of the inflationary burst.
So the takeaway is that perhaps the housing market is a little bit healthier than these indices would suggest?
Well, I think the takeaway is that which housing market you're in counts for more than the housing market.
Okay, but let's talk about the housing market as it relates to the macro economy. A little bit better than perhaps the indicators would suggest?
I don't know that I would say that. I think, the fundamental fact was that as I've said a number of times, I think on this program, what happened is we ran out of people, but they kept building houses, and so we have this supply of buildings that really are too many for the number of people who can actually afford to own them, and that is still a problem, and that's why we have the overhang of potential foreclosures.
We've seen mortgage rates come back down. The 30-year qualifying loan, what you can get insured by Fannie Mae or Freddie Mac, is down to about 4.5%. It's really, really come down.
Yep.
Not close enough yet to its November, October lows, but what I want to know from you, is that going to help to clear out this inventory of unsold homes, or more likely just drive another wave of refinancing?
Well, it's not. It doesn't appear to be driving that much in the way of refinancing. Certainly, people who have experienced a serious decline in housing prices, in many cases, their credit may have deteriorated as well, and the higher fees that are being charged by the agencies and so forth have made it difficult for them to refinance. Also, a lot of the incentive that people had to refinance during the boom years were incentives that didn't have to do with rates, they had to do with cash out refinancing, the proverbial ATM machine approach to home ownership. And that's no longer there. So I think the refinancing is apt to be subdued, but on the other hand, that the more important factor is that the percentage of households that are single-family homeowners has been coming down, and that may be a longer-term trend, in which case the absorption rate for the houses already on the market is likely to be much slower.
Don, before we go, I need to ask you about the economy. There have to be some assumptions built into your view of the market and how you trade. What do you think is going to happen to GDP growth? What do you think is going to happen to job growth?
Well, I tell you, I think somebody better do something smart soon. And
what's a good idea? Give me a good idea.
Well, I tend to think that we need some kind of additional stimulus. It could come in the form of monetary stimulus, but if I did it that way, what I would do is I would insist that the people who have access to the money, namely the banking system, put out more loans. I think that bumping up final demand is going to require more than a carrot. There needs to be a little bit of a stick there as well. On the other hand...
How does that happen when you have Jamie Dimon publicly challenging the Federal Reserve Chairman over bank regulation as it exists now, and you're effectively saying the Fed needs to put a gun to the head of the bank CEOs and say, lend more?
Well, I didn't say a gun. I said a stick. And, maybe it would be a fish stick or something. But the idea is that, in a way, there was an opportunity missed way back in 2008, the beginning of 2009, when, the issue was framed in terms of nationalizing banks. It could have been framed, I think, better in terms of giving banks the money to lend, but making sure they lent it. And had that happened, had that pressure been put on them, perhaps we would have gotten more bang for the bucks that were created at that time. On the other hand, there was, people distinguish between monetary and fiscal stimulus, but at its heart, there really isn't that much of a difference, except in the form in which the money that's being put into the system gets transmitted into the real economy. Today there was an article about reducing payroll or maintaining lower payroll taxes. Things like that could be done as well.
All right, Don, as always, thank you for joining us. Don Brownstein of Structured Portfolio Management.